Big things are brewing in the stock market. Yes, they are. In today's episode, we're going to be going over the FANG stocks. We're going to be talking about the dollar yields. There's going to be timestamps in the description below. Going to go over some various indicators as well as crypto and then wrap it all together with a conclusion at the end. Let's get into it. All right, welcome back to the computer. We're going to start off here at the dollar chart. Just take a look at that run up in the dollar. We almost cracked that 96 handle there. We finished at, we closed at 95.91, but we had a high of 95.98. So what's driving this? I couldn't tell you. We started seeing this really start to rally with an increasing rate of change ever since that CPI data came out. And we're also seeing other currencies actually start to roll over, including the euro, which I'll show you a chart of that here momentarily. But still very interesting that the dollar is rising very rapidly, and we're just not getting the S&P 500 to have that inverse correlation quite as much. So perhaps there's a lag time, perhaps there's not. Perhaps the dollar is going to hit into an area of resistance and start sinking, and then the S&P 500 is going to rally like crazy. It's like it benefits when the dollar falls, but it doesn't do anything when the dollar rises. We have seen it in the past. You can see right here where it hit this little area of support, rised up, and you can see the S&P 500 took that 5% or so correction. And vice versa, we've seen it when the dollar falls, the S&P 500 really rallied. So for example, right here, fell, and then right here, you can see that we saw a pretty solid rise from this point up. So interesting stuff overall. Let's take a look at the weekly time frame, this inverse head and shoulders. We were tracking this way back when, and it is continuing to break out, and we're just about at that full measured move of a target, and the RSI is getting a little overbought, a little frothy, so perhaps the dollar might be slowing down here soon. And if that's the case, if the dollar starts slowing down, that might be actually really good for commodities. Gold, gold took a little bit of a hit today. I think I have that chart up. I'm not 100% sure if I have that chart with me right now. I don't think I do. But gold took a little bit of a hit today, but it's still above that 1840. The Euro USD, this is just looking at the opposite pretty much. You have a head and shoulders pattern, broke the neckline, and we're heading down right over to here. Now, that's a full measured move. I don't know if we're going to get there. You can see also the RSI is getting a little bit oversold here. So perhaps this might be finding its bottom to turn up a little bit, and perhaps the dollar itself might be running into an area of resistance here very shortly for this full measured move. And if that's the case, perhaps that's going to maybe allow for Bitcoin to find its footing a little bit, right? Bitcoin's been struggling, especially with this dollar move here. Equity market's been somewhat fine. It's just been a very interesting, hard to follow type market. Now, one thing that I'll be pointing out on the Discord here is mining stocks, because if the dollar does start to roll itself over and gold continues another leg higher, the miners will probably benefit greatly from that. So that's something to watch out for. Oil, we had a higher high, higher low today, so that's a positive sign, but it did finish down slightly overall. This still could be in this this trend where it's just ping-ponging around. So yes, I showed some energy stocks yesterday. If this gets some legs or some footing, that would probably be very good for those stocks. CPE was one of them. I forget the other name that I had available. If you take a look at copper, copper did poorly today on a rising dollar, but it's still holding really within this kind of just basing pattern right here. So if the dollar does, like I said, find its area of resistance, start falling potentially, that could very well take copper up, it could take gold up, it could take various commodities up too as well. If we take a look at the market dashboard, pretty much green across the board. You can see here Dow Jones up, S&P 500, NASDAQ, New York Stock Exchange, small cap, mid caps, all up, but nothing too crazy of a day, and VIX was down ever so slightly. If we take a look at the 11 sectors, consumer discretionary and technology, they led the way. Consumer discretionary, if we look at the industries within that, it's automobiles were one of the top, as well as like home construction, I believe it was. But if you take a look at automobiles, well, I mean, you probably have seen the crazy moves in LCID, the Lucid Group, Rivian. I believe that now options are trading with this, and there was some pretty crazy call buying within this stock, and we'll get into those charts here momentarily. And then also Tesla was up 4% on the day. It was a bearish start to the day, but it really did turn around. So we'll take a look at those charts here really quickly. If you take a look at LCID, I think it's up in the after hours session sitting around 59. One thing I want to call out here, this is actually called out on the Discord, this little move right here, boom. This was a pretty solid bull flag, kind of just ripped through that. And actually, if you measure from here to here, it's the same distance from here to here. So that was a full measured move of that bull flag. Now, if I were to measure, say, this pole to here, and then this breakout taking place here, that's going to take us up to around 58 or 59, which is where we're at in the after hour session. So we might, as also the RSI is getting pretty burnt to a crisp, we might find a potential sort of blow off move tomorrow as we're getting pretty extended on this 2-hour time frame. But, you know, it's anybody's guess. This market can get crazy. We've seen things like Avis cars, right? That thing just took off like nuts. So who knows? Who really honestly knows how high this thing could go? But I would just be very careful in this environment. A lot of volume to support that move too, as they reported on earnings, I believe it was today. If you take a look at RIVN, you can see here on the 2-hour time frame, literally just completely vertical up, and it's just within this bull channel. So yeah, you know, it's completely vertical. We're going to get a sell-off eventually. You know, it's going to come. So if you're chasing up into this range up here, just be very careful about that, you know, because if you're chasing up, you're chasing up, you know, we typically take the stairs up, boop, and then elevator down. So there will come probably an unwind at some point here. So just be very mindful of that as far as managing risk and position sizing. If you take a look at Tesla, 2-hour time frame, well, we found this little double bottom today right here at around 1,000 to 975. We started finding support from that. MACD crossed over. That's bullish. RSI on this time frame is still slightly below 50, but overall, I mean, it's just ping-ponging within this channel now. So perhaps we come back to test up 1125. And then these moving averages cross back over, and that could be a really bullish sign. However, just be mindful if we start cracking down and holding down below 1,000, it looks like we'll probably come fill this gap right here, which is right around, you know, 900 to 950, that zone in there for Tesla. So that's something to watch out for. And one thing that I want to really pay attention to is the banks. So KRE, again, the financials, if you just take a look here, we talked about them yesterday. It was flat yesterday, and we're darn near flat again today in the middle of the pack. So it's just interesting to me as yields have been rising. Typically, you know, financials could benefit from that. And we talked about the potential bullish aspect of that and the bearish perspective from that. But if I just take a look at this chart, it's just coiling tighter and tighter. You can see here the MACD looks like it's ready to have a bullish crossover above that 0 line. You can call this a pennant or flag, whatever. So it's looking pretty positive overall. We need to just crack through this high here, just over 75. And that could be very positive for the financial sector or even the KRE if you want to trade the KRE. All right, let's continue to the FANGMAN Stocks. So I'm going to look at the map, the heat map of the NASDAQ 100. And you can see here, you know, Google relatively flat for the day, Facebook slightly down. What held it all together? Well, Tesla being that bright green name that was up 4% on the day. And make no mistake, Tesla does really have a good grip on this market. If we see a lot of weakness here, I mean, it could put pressure on the overall markets. Microsoft and Apple, Nvidia, they're all up slightly on the day. AMD had a really nice day. So we're going to get into some of these select charts. But before we do, what I want to start off with is this relative strength line of the FANGMAN. So if you just look down this from basically up here down like this, you're going to see Facebook, Apple, Nvidia, so it spells out FANGMAN that way. And what we're doing is we're measuring it to the S&P 500. We're looking for relative strength, okay? So first off, I want to call out on each of these, the blue line is the 50 EMA, okay? What I want to call out is stocks that are above it. And that means the relative strength is, you know, most likely performing as long as that relative strength line is turning up. So let's just walk through it. First off, Facebook, it's below the 50, and you can see a slight turn down here in Facebook. So from a relative perspective, not performing too well. Apple, relatively flat to down, and it's below the 50, not looking all too hot, but we'll look at absolute performance here soon. Nvidia, star performer, it's sitting right around all-time highs for that relative strength line, and it's clearly above the 50 EMA. If you take a look at Google, Google is right there at the 50 EMA, but it's been flat for quite some time. Okay, we want, if you're a bull, you want to see this stuff turn up. Okay, that's what you want. Microsoft, this is very strong, all-time highs from relative strength, and it's above the 50. That's very good. Amazon, flat, right? And it's sitting right at the 50 EMA. Netflix, looking pretty decent overall. It's been consolidating up in this kind of pocket over here as far as the relative strength, but we're still holding an upsloping EMA 50. All right, so a couple ones to call out, remember, was Nvidia, and we'll look at that chart. We're going to look at all those charts, and, you know, Netflix looks pretty decent. and then also Microsoft, right? Those three look very, very good from a relative performance standpoint. And that's important when you start to take trades, is looking at relative performance. So let's get into it. Okay, so Facebook, right? That was not looking too good from a relative standpoint. However, let's take a look here. We have a possibility for a bottoming pattern, right? An inverse head and shoulders. We broke the neckline, but this could have been a fake out, right? At least it's above. This is the 2-hour time frame. I like using the 2-hour time frame, especially as of recently. I just prefer it. I've been using it for a long time, but I'm just recently bringing it into this show because it's just a clean chart. We're above the 20, above the 50, and we have a little bit of a bull flag forming potentially, okay? So we need to get back above there, and you can honestly see there's been some clear resistance overhead at around 355 in this area. So we broke out, tagged that, and then we started heading back down. So this could be a bottoming forming potentially, but just remember, relative performance isn't quite there as yet. As of now, if this starts breaking out, if this is a full measure move up of this inverse head and shoulders, we go back up to 380 to 385. That's what we do. That's just how it works. I mean, not in all cases, but I don't want to talk uncertainties, but that would be a full measured move. So if we do get a full measured move, that's where that would take us. Apple, a potential little pennant pattern taking place right here. Remember, it wasn't the greatest from a relative standpoint, but we have the high right here act as resistance, 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 and then we have a low, a higher low, and a higher low. So now these are contracting. So boom, boom, it's contracting. Expansion can lead to contraction, and then contraction leads to expansion. So where does this go? Well, if we start breaking above this 152, we can head higher. If we start breaking down below, this low right here, right at around 147, well, guess what? We can continue heading lower, potentially coming down to fill this little small gap over here on the 2-hour time frame around 140 to 141. Okay, so let's keep continuing on. NVIDIA on the 2-hour time frame, that looks extremely bullish. This looks like just a nice tight flag pattern. You can see price, nice big expand, nice pull of volume up. Price expanded. Now it's contracting. Volatility is contracting. It's going to lead to some sort of move to the upside or the downside. I'm not taking a bias as to where it'll go, but if I was just looking at context of the chart, you got to give bulls the benefit of the doubt, right? Just because it's above the key moving averages, you had the MACD, crossing up slightly over here. It's starting to curl up. You had a nice pull in volume. Volume's drying off. It's above those moving averages. RSI is above 50. So yeah, bulls get the benefit of the doubt here. All right, and NVIDIA is a highly traded retail stock. So if we start cracking through this 307, 308, this kind of range here, perhaps that gives us another leg higher here for NVIDIA. And, we saw AMD today, and AMD was just a runner. Google, like we said, from a relative standpoint, not looking all too hot. And there's a possibility for a head and shoulders pattern forming. But, it has to play out. We have to crack down through this 2875 level. This kind of neckline right here, and then that can send us down here to 2750. But overall, yeah, it's not like it's in horrible context, but you're just getting a lot of just like choppiness back and forth, and it's kind of forming that, like I said, head and shoulder potential pattern like that. If we take a look at Microsoft, we tapped into all-time highs, I believe it was today, and then we sold off slightly, but you can see here, a little inverse head and shoulder, right? And then we started cracking above it. So right here, that's 330 was the head, the neckline, which is around 337. 50, so $7.50 move is the potential full measured move of the target of the breakout. So from 337.50, so that would be up to around 345 for a full measured move there. Amazon also not looking too hot from a relative standpoint as far as the technical pattern that's forming right now. Potential diamond top, or diamond pattern is what they're called. You can see here it's just forming somewhat of a diamond. So price is contracting, it expands, and then it tightens back up again. And how you measure this? Well, you basically just look at the high to the low, and then you measure it from a breakout point potential. So yeah, if we start breaking down, we come tag 3375, and a couple $100 move there. And if we start breaking out to the upside, well, maybe perhaps we start moving up a couple 100 points. So that's something to watch. But just remember, from a relative standpoint, it's not looking all too hot. But that doesn't mean it can't obviously change. Netflix is looking pretty darn strong, right? You got to believe that strong stocks continue to get stronger, and that's just been the case here with Netflix. We have a potential for an inverse head and shoulders with a neckline right at around 690, and you can see here, basically 650 to around 700-ish. We're looking at a $50 move for a full measured move if we break out here of Netflix and continue to head higher. So 740 to 750, that range could be a potential full measured move here in Netflix if we continue to rip. Now, we went over those. We went over the price charts. We looked at some strong ones. We looked at some bad ones. What could potentially be, something bad that can take place that could really hurt tech, where all of them can roll over, including the potential market. And we've been talking about this. We got to look at yields. All right. So the rate at which a yield moves can put pressure on tech. We've already seen it, and I'll show you again. But this right here is the 10-year yield, the TNX. You can see it's forming inverse head and shoulders. The neckline descending, it's sloping down, right? So it's not like a perfect horizontal line or anything, but it is still a clear inverse head and shoulder. So if we start breaking out of this, there's no saying like if this goes to a full measured move or not, but if it does and we see this thing really start to rip up higher, that could put pressure on tech, and it's looking like it's ready to break out. Now, from a bearish perspective, or from a bullish perspective, I should say, for the tech stocks, is this isn't broken out yet. And we're still below the 200-day moving average, right? And it's down sloping. So if this doesn't break out and this actually starts turning around, well, guess what? Tech could still continue to rip. And you don't want to hold, too much weight on any one particular thing, as we've seen correlations kind of break and fall. But still, if we see a strong move out of here, overall, you want to be very careful. Now, if we take a look at the correlation between the Qs and TNX, that's what this is right here, okay? That's what this middle indicator is. So when you can see here that the line, this is the zero line, boom, this little line right here all the way through, it's the zero line. So when it's down below zero, that means that there's a negative correlation between the 10-year yield and the Qs, okay? Bear with me here. As you can see, looking for pretty much this year, the correlation has been mostly negative. Right? And that's what we've been talking about, right? There's been periods of time where there's positive correlation. So when they, moved up, or then when the 10-year yield moved up, Qs moved up too. When the 10-year yield moved down on this, 10-year yield probably moved down too. That's a positive correlation here. The majority of the time it's negative. Okay? So if it continues to hold negative, that's the point of this, right? Me telling you this. If it continues to hold negative and the 10-year yield breaks out, guess what? That's going to put pressure on the Qs, right? That, the Qs are made up of multiple stocks, but mainly the large mega cap stocks, including in the S&P 500, are all these FANGMAN stocks that we just discussed, okay? However, if it remains negative, this is, a good thing. If it remains negative and the 10-year yield backs off, well, that'd actually be good for tech, right? Yes. So that's what we need to watch for. That's an important factor. So if we start seeing that breakout and we hold still a negative correlation, you just need to be very, very careful in that environment. Now, if we take a look at the advanced decline line for the NASDAQ, I actually pulled this. I learned this one from stockcharts.com by, I believe his name's not David Keller. He's amazing, but David Knepper. I can't pronounce his last name, but I use the NAD. But the way that he used it, the NAD is the NASDAQ Advanced Decline Issues. But the way he used it was applying a 21 and 50 EMA. And I thought this was kind of cool because it really shows that when they're both rising and they're above zero, that's good for the NASDAQ 100. However, when they're falling and then when they get below zero, it could be somewhat negative. And one thing that I kind of noticed was when they're both crossed down through zero, you see some weakness take place. So right there, you saw a little weakness there. Here, right, it just consolidated and then it triggered again right there, and then you saw some weakness. Here, it was just some chop and some weakness. Here, chop, well, actually, no, that kind of ripped down. And then right now, what I'm calling out is it's been actually both the 21, which is the green one, the 50 EMA, which is the blue one. The 20 is now starting to cross beneath, which it has already, beneath the 50, which is a bearish crossover, and they're both pointing down to that zero line. Meanwhile, what's interesting is price action's been heading up. So it's just, what this tells me is that the market's ripping up higher, but yet internals are diverging from what the overall, NASDAQ 100 is doing. So there's some weakness which most people might be overlooking. Okay, so once again, if we see that 10-year yield rise and internals start to break down more, it might just be sucking in people. We might be going through a melt-up phase, and then all of a sudden you get this unwind, and it can be pretty heavy. And, I don't have skew up here, but I know skew's relatively high. And typically when it's really high like this and some of these other assets and the things that we look at, what you can typically see is you see the S&P 500 have like multiple, up days, but they're really small. but also there's the possibility for when you do get the down day that it's much more aggressive. That's, one way to interpret it. Now, the Qs. Let's just take a look at the 2 hour on the Qs, right? We got through that little area right here, which we talked about yesterday. It had a little bit higher, bullish crossover on the MACD, above the 20, above the 50. I mean, it looks good, right? It's bullish. That's bullish. What we need to see is obviously new high. And if we get to new highs, take a look. It's going to be doing so on a negative divergence. So also just price action looks bullish. It's hard to be bearish when everything is so bullish, but just because, you got to be bullish in these times doesn't mean that you can't just pay attention to the underlines, the signs that are going on, all right? A lot of people say, oh, you're either bullish, you're bearish, or you're this, or you're that. No, I'm just prepared. That's what you got to do. And I've also heard people say, well, you're bearish one day and you're bullish another day. Good. That's what good traders do. Especially, you can't be one or the other, really, because you can be bullish on a daily time frame, bearish on a 15-minute time frame, right? So it's just, you can't put yourself or other traders in a box. You got to be smart enough to understand that. XLK, so I'm just looking at the technology sector, that did hit all-time high, so that's never bearish, right? Boom, broke out to all-time highs. You can see, boom, boom, and then little took off right there. So that's a pretty positive sign. Bullish crossover on the MACD. One thing to call out, new high, negative divergence. Okay, that doesn't mean anything until it actually means something though. Let's get into the S&P 500. It's already running later than I thought it would. S&P 500, nice day today, right? I think the futures, ES, they did tag to an all-time high. They didn't close at an all-time high, but they tagged an all-time high. So if we were to say this, yes, negative divergence on an all-time high, despite it didn't reach to an all-time high. It's a closing all-time high, I believe. I should have looked into that. It looks like it, but you can see negative divergence, and we talked about that pretty much when price action was down there. So what does that mean? Well, it means just be careful, right? A lot of big market tops, not to say this is going to be a market top, but hey, could be the start potentially of like a little bit of a move down to the lower Bollinger Band and 50-day moving average where you'd be wanting to buy it up. Doesn't mean that's going to happen, but something to prepare for. But a lot of those tops and things that take place, they happen on negative divergences. 2 hour time frame. You can see here a little bit more clear the negative divergence. And you can see here, let me see. There we go, the pen. Potential for a little double top, but overall, price action is very bullish. You have the MACD crossover, you're above the 20, you're above the 50. You can't really complain here, right? So maybe we do pull back a little bit, and maybe we just tag this 50 EMA again on the 2 hour time frame. That would be good, right? That would be a good little sign. We tagged it here, that would have made for a great move. So let's continue on. The VIX did exactly what we talked about yesterday. It moved down, filled this gap that we left open, and then we started to bounce slightly. It tagged lower Bollinger Band and moved up. So the structure of this little wedge here, still on. We had this little positive divergence here as price action hit a little bit of a low. So the risk to the S&P 500 is still to pop out of this and potentially fill this gap and even that gap right there. Another thing that's interesting is the 9-Mont. This is a Nicey-McClellan oscillator. This thing is continuing to fall off a cliff as we press into an all-time high with the New York Stock Exchange. We did put a little shooting star candle there, but this is once again, right? Markets are hitting all-time highs, but the internals are falling apart here. So this is not a good sign. And you can see we crossed down through zero. And the last negative divergence here, we started to see some aggressive selling. So what does this mean? It doesn't mean that you need to go short the market. It means you just need to make sure that you're taking profits if you're in the green and or updating your stop losses if these are false signals or false divergences, okay? Nicey-McClellan Summation Index, the only thing I want to call out here is it's starting to slowly curl over right here at up around that all-time high. So, yep, that's, don't put too much weight on it. It typically matters more when it gets below zero. As you can see, we started curling below zero here. That was when we saw that 5% move, the most recent one. Another thing is the NI high-low. This is a Nicey high-low index with the 20-period moving average. What I want to just call out here is it's been kind of rounding off, and it looks like it might be crossing down through the 20-period moving average as it's been kind of up in this elevated area. Typically, when we see that curl over, we've seen this sell-off and this sell-off here. So perhaps that starts some selling pressure that takes place here in the New York Stock Exchange. Nothing's guaranteed, folks. Not calling for it, but you got to be aware of this. The BP chart. Negative divergence still as we're moving into that oversold territory. So another, getting overextended. Now overextended could stay overextended for a long time, but just call it as I see it. Higher highs, lower highs. Negative divergence there on the RSI. All right, so that means what? It means the internals are weakening. It's losing momentum there, but the market continues pressing up. If you take a look at the NIAD advanced decline line, this New York Stock Exchange advanced decline line, also selling off a little bit here as the New York Stock Exchange actually went up. Same with the S&P 500. So small divergence taking place there. Last thing really quick on the SPY indicators or indicators that I use, signal charts. This, I don't put too much weight on this, but in the recent past, when the rate of change between the tips and the bonds, they get to around 1.3 to 1.5, where you can see all these pink circles here. Volatility shortly thereafter, typically we get this little spike. Boom. The most recent one was here. And as you can see, we saw a little bit of a rip there on the VIX, pretty much immediately after. And now we just had this really big rip up here, and we're starting to point back down as volatility is down here. And we do have those gaps still above us where potentially, it's an early warning indicator that, we might be getting a volatility spike here very soon. Not guaranteed, but as you can see, the last 5 times, it's been pretty spot on as a leading indicator for us. As far as why, I don't know. It's just a correlation that I saw and a correlation that I kind of keep an eye on now. Russell 2000. This one looks not too bad, right? So we said that gap down and we started to recover. So that's not a really bullish engulfing by any way, but potential piercing pattern there, and it's kind of flagging itself right here, and it's from the breakout zone. So yeah, do we get more sell side activity down to the 20-day or this previous resistance? Perhaps, but right now it's consolidating, and I like consolidation, especially after a big move. The only thing that's kind of got me on edge is this little bearish crossover, still above zero, but doesn't mean that can't just start to curl back up and small caps start to lead the way again. So that's kind of what I'm watching for. And if you look at the 2-hour time frame, it didn't look all that good yesterday, but it's starting to perk up slightly here today. You can see the MACD curling itself. It's over on the 2-hour time frame. It's trying to get above that zero line, and you can see that flag a little bit more carefully, a little bit closer right here. So perhaps it's setting the stage. If we get above the 20-day or get back above this 241 level, that gives us the opportunity to start really ripping here back with small caps. Let's hop into crypto, because crypto obviously took a pretty big wicked downside move. You can see Bitcoin on the week is down about 10%, a little bit more obviously from its previous all-time high. And we call this out ahead of time, but it's always hard to determine where crypto can go to, and there's so many different indicators out there. There's so much different things you can look at. You just need a strategy. We don't know if this is going to turn right around. A worst case scenario, let's look. Well, I don't know. Worst case scenario is, who knows what the worst case scenario is? Worst case scenario, it falls back to 5,000 or even lower, right? That's we don't know what the worst case is. But from a technical perspective, on the weekly time frame, I would say this previous area of resistance here, if price actually came down here, the 20-week and 30-week are still below it. So yeah, maybe 52,500. That would be a pretty dramatic move, in my opinion, to the downside. So if you do see continued selling, then yeah, I'd be looking at that area for a potential hedge long. But I look at the cellular shift rotation tool. That's the strategy that I'm using, and that's what I'm implementing just to really see how good it can do and how long it can last. Right now I'm up, so I got out of my position because my stop was triggered, and I've been using it on Ethereum. So my stop was triggered, and I'm up since the last 2 buy signals, just under 60%, so like 52% or something like that, because I did take a hit. It's not like I was unscathed by this move, which that's totally fine. You're gonna take losses, you're gonna take wins. Now, if you take a look at the daily time frame, you can see here 50 it tagged the lower Bollinger Band, which we said was a possibility, and it's just really within this trading channel. Bam, right? So there's resistance here, then it broke out, resistance, support, because resistance can turn into support, resistance, well, it acted as resistance again, I got a little bit above it, and now it's pulling back down into this previous area of support, and that's right where the 50-day moving average is. So, hey, are we gonna break this? I don't know. If we break that, well, then we can go down to that area, which is right around the 100-day moving average, where that previous peak was, which we just recently discussed. So 52 to 53,000 potentially if we start cracking down. Is that gonna happen? I couldn't tell you. I really couldn't, but it's overall still in very bullish context. So the daily time frame, we're getting a pullback, right? In bullish context. That's what it is, okay? So you don't need to sweat it. It could be turned into something bigger, but as it stands right now, we are in a trading range. Boom. And yes, it's a volatile trading range, right? 69,000 down to 59,000. So it's a wide move there, but it is what it is. If we take a look at the 2-hour time frame, pretty darn bearish overall, right? Not much to report. It's pretty much at its low here, but you can see 59,000 still holding as support. You know, we had the big pull, then consolidation, and then it had this little, that's kind of a nasty, that was nasty bull trap right there. See how it got above this previous resistance and resistance? That right there, I guarantee you sucked in a lot of people right there. I was even considering getting, adding to a position because I don't think I was stopped out at that time. I think I got stopped out. I don't know where. I have to look at the Ethereum chart, but that was pretty nasty. All right, let's continue. Ethereum, weekly time frame, worst case scenario. Well, once again, I don't know if it's a worst case, but if it continues to head down, yeah, 4,000 looks like an area where it could potentially bounce from. That was previous resistance here. It's a nice round number, right? But this is a evening star pattern. We still have more time left in the week, so this could potentially break down further. If it does break down further, let's take a look at this area right here, which is around the 20-week moving average, and a very strong inclining 30-week moving average, which is tagged here and here prior. So if it does come down, yeah, I would start looking at 3,000 to 3,250. Bam! If it really came down there, that'd be a pretty solid move actually, and you got to be ready. You got to be ready because even if the buyer sell signal wasn't triggered there, I'd probably consider trading it. Just probably not with the Zeta Shift account. All right, if you take a look at the daily time frame. Once again, bullish context, 50 sloping up, 100 sloping up, 200 sloping up. What are we doing? We're getting a pullback. Where can we get a pullback to? Potentially the 50, right? We pulled back here into the 50, bounced, but then crashed through, got back above it, pulled back to it, and now we're heading higher. It cracked down through the 20, right? It acted as support here, and then it cracked down. We're seeing some strong sell-side activity into the lower Bollinger Band. So the 50 would be the next spot, which is where, well, like I said, that's right around that 4,000 marker. And if we start to head lower, yep, 3,700, even head lower, 3,100 are those levels, okay? What I want to see is this thing start to turn back up, but you know what I want doesn't mean it's going to happen. The market never gives you what you want easily. 2-hour time frame right here. Very similar, right? Big pull to the downside, bounced up, pull to the downside, trailed around, and then boom, we saw that big flush when it hit down this 4,500 area. So 4,500 acted as support, support, support. And once that support gave way, the third time or the fourth time, trying to test it again, bam, we've moved pretty strongly to the downside. MACD's trying to curl itself back up well below zero. And then the RSI is getting pretty fried, just like we saw there on the Bitcoin chart too as well. All right, let's wrap this up, okay? Conclusion, what do we got going on? So first off, just to really wrap it up, pay attention to the 10-year yield. Don't ignore the dollar ripping like crazy. But what I do like is that the dollar's ripping like crazy. Things are kind of held together at the moment. So if the dollar starts falling, I think that's going to be very beneficial for gold miners, for silver miners, and potentially even the equity markets. But why I'm saying the other commodities right now is because they have a lot of catch up to do. And if they do actually start performing, that could be very beneficial. Also, hey, if it starts turning down, the dollar starts turning back down, and maybe even yields start to, back off a little bit and don't break out, that could be very beneficial for Bitcoin, right? We've seen the correlation before, and we got to just something that we watch. Now, if we're looking at the 15-minute time frame, there's been just some interesting sell side activity towards the end of the close. You can see we broke out of this high, boom, and then it trapped some bull trap there, but we're still above the 5-day moving average. Okay, and we talked a lot about the New York Stock Exchange and those various indicators. So that could have been a little blow off move, and then it got completely reversed. So tomorrow it could be very interesting. We might have more volatility up ahead. 15-minute time for the SPY. You can see also here we sold off into close, and the RSI on this 15-minute time frame got back below 50. So once again, just obviously be careful, but still it's in bullish context, right? We had this little head and shoulder pattern. Boom, we broke through the neckline. Perhaps we back test it, and then we start ripping higher. You got to see it clear new highs. Obviously, like I said, it could be around 475 for that full measured move. We're not there yet, and it's going to happen on a negative divergence if it gets there. So once again, just need to be mindful, be careful. The Qs did hold up, right? But we already talked about, and this is the 15-minute time frame, they did hold up, but we talked about the possibility for what? For the yields to break out, and that can put some pressure. As it stands right now, just flagging as the RSI is kind of dying down. We have a crossover right there. So above the 5 EMA, daily 5 EMA, that's a good sign. So, perhaps we pull back and then head higher. All right, so things are still bullish, but you just got to be, once again, careful. And the last one, actually one more after this, DIA, you saw a lot of sell-side activity into close too. That was a pretty brutal move. You can see how we gapped up and then completely reversed it towards the end of the day here. So pretty nasty look there. But overall, we're still above the 5 EMA, 5-day moving average, sorry. and we broke out of this, so it could be just potential back test. So once again, it's some nasty sell side activity towards the end of the day, but nothing too crazy. Then the last one is the IWM. Now the IWM, like I said, on the 2-hour time frame, looks pretty decent. Looks like a bull flag, but it's still right there at the 5-day moving average. So we want to see this get back above the 5-day moving average, get back above that 241 right here, and that could be really good. We're starting to see this happen. We have a low and a higher low, and right now a higher low. So we also have a high, a lower high, a lower high, and a lower high. So expansion is leading to contraction. That this contraction is going to lead to a pretty strong aggressive move, whether that be up or down. You just need to be prepared for what takes place. So if we start cracking down, you can potentially find short positions, right? I'd be very careful shorting this market, but if it starts heading up, you find long positions, and that makes for good risk to rewards. That's all I got for you on today's episode. Everybody have a wonderful night.